Welcome to Market Edge, ahead of the trade. I'm Owen Larson, and today we've got a powerhouse session lined up that's going to give you the insights, strategies, and market intelligence you need to stay ahead of the game. We're diving deep into the latest market action, breaking down whether we're looking at a healthy higher low or if signs of a market top are starting to show. As always, we're following the money, tracking institutional movement, and getting clear on where opportunity lies. To kick things off, we're going straight to Pat Walker with his ETF breakdown, where he's analyzing the key sectors, identifying leadership, and making sense of where institutional capital is flowing. His insight is critical because before we dive into stock selection, we need to understand the broader landscape. If you're trading in a market that's rolling over, it doesn't matter how good your stock setup looks. The tide is working against you. So let's get the lay of the land with Pat, and then we'll come back and unpack today's core lesson.
Well, you look here and you go, that's kind of choppy. But then you look at the weekly and say, well, it kind of looks like it's forming a cup with a handle here. Yes, you're exactly right. Now, it doesn't mean buy now, but the bigger picture says it doesn't look too bad. Now narrow it down a bit and you can say there's some distribution on this bar, but not heavy distribution. Look at the low volume. But there was distribution here and there was distribution Friday. Tells us there's some selling going on here until we see the markets on the daily start to take out these highs, which will also coincide and complement with the weekly. You'll make better investing decisions and be on the right side of the action for right now. So that's where it's at. And again, there's some distribution in here. This is a great color coding scheme too. Green and red, okay? It's kind of like a stoplight. Green means go, red means see if you can make it through. No, I'm kidding, just teasing. Red means stop, okay? There we go. Let's move on. Gosh, it's good thing I didn't teach drivers that, right? QQQ, we looked at the S&P 500. This is the NASDAQ 100. Now, it doesn't look too bad on the weekly. Always remember, this is important. The weekly chart is very important, and so is the daily. Pattern doesn't look too bad. If it starts to lift through these tops, it could be good. But at this point in time, there is some distribution occurring here. Says be cautious. Be a little cautious. Let's move on. ARK Innovation, that one's hanging in pretty good. ARKK, you could punch up ARKK and find out their top 10 holdings. There might be some opportunity there. It's hanging in okay. Might make a note on that. Needs to take out these tops with volume. Notice on the weekly also, closed okay here and it closed okay here. It closed in the top third of its daily or weekly range. That's a plus, but it needs to push through in a good market with volume. That's why we do these, is to teach and education coach. ARKW, same situation. The daily, there's a tail bar. Then you look at the weekly and go, that doesn't look too bad. By the way, I need to share this. Institutions key on the weekly stuff, big time, folks, okay? The bigger money looks at this weekly stuff. We do too, and I taught it for years at IBD meetups. Weekly and daily combined together is real power for decision making and money for us. So you can see, weekly doesn't look too bad, daily doesn't look too bad. But it needs to show power. Now take it a step further. Well, there's a tail bar here. It ran up and closed near the lows, ran up and closed near the lows here. Tells us there's a seller there. What does that tell us? It needs to take out that top, those tops, and it needs to do it with volume. There you go. Let's move on. Here we go. Biotechnology. Now, that's pretty dang sloppy in my book. Look, it's well off the highs. Do a compare and contrast. Oh, this is kind of close to the highs. Oh, this is well off the highs. Yeah, for right now, and it runs up here and drops down again hard. Loose, stay away from it for now, okay? Energy, way off the highs, lagging on below the falling 50-day. Stay away from energy for right now. Dow Jones Internet, a technology-related area. That doesn't look too bad, does it? Look at the weekly here, and then it's a quiet bar. Quiet weekly bar here. It needs to take out these tops. FDN. And again, what is that? You can always look up here. That's Dow Jones Internet, technology, internet stocks. Good to remember. You'll probably hear this theme a couple of times about technology. IBD 50, look at that. Doesn't look too bad on the weekly. Doesn't look too bad on the daily. Did run up and tailed off here, and it tailed off again. Tells us again there's sellers there. But the overall big picture doesn't look too bad for IBD 50, the big quality growth stocks. There's not a perfect entry or a really clean entry now, but it is overall showing strength in big name growth. And that's good to know. That's a good proxy right there. I like that. Let's move on. Gold miners, doesn't look too bad. Trending up nicely on the weekly. And on the daily, it's okay too. There's no clean entry here though. Okay, please. I'm not saying, oh, let's buy it. No, always focus. And Mitch and Winters, we're big on this. Is clean and simple entry, folks. That'll help you. But the overall trend is okay. Same thing's true with gold. Own gold down here. Weekly base breakout. Look at the trend up the ADMA. Isn't that beautiful? And we've sold a couple of times into strength on a tail bar here and here. We're in great shape. No matter what happens, we'll make really good money. There it is. I'm not bragging, okay, please. No, I'm just pointing out the power in the tactics. And remember this, good entry and trends pay more than all the decisions you'll make. Let them work. Let them work. Now, buy it here? No, it tailed off here and it tailed off here. It's met with selling up here. Let it settle down before we look for an entry. But from lower price, we're in good shape. Well, again, on these videos, I try to give guidance, try to educate. I don't want to just give ideas. I want you to know why is where the power is. As I said before, to know that 2 + 2 = 4 is knowledge. To know why 2 + 2 = 4 is knowledge that's applicable to other situations. There we are. Hack. Lifted up here a little bit, trending up nicely on both the weekly and the daily. No clean entry now, but it does say the group is showing overall strength. Something to follow. Biotechnology, look at this. It rallies up and drops really hard. Rallies right up almost to the same spot. Look at that. Right here and there. There's the tops. And boom, drops right back down. You can see it on the daily too. See that? Big tail bar. Take it back down. Runs up, big tail bar. Take it right back down. The high on this bar, folks, people use this. We use this at Mission Winners, and we teach it for you. High on this bar is 142.84. The high on this bar is 142.80. There's 4 cents difference between these two bars. That runs right up there, and they knock it right back down. For right now, be careful with biotechnology. Met with selling. Online retail doesn't look too bad. Not a clean entry there, but overall the trend is up. Okay, you look in IBUY. That's easy for me to say. Maybe you'll find some things there. But it is showing strength. Software technology doesn't look too bad on the weekly or the daily. I drew this little base right here, and no, maybe it'll start to push across these tops. On IGV, Idaho Victor, IGV, something to watch going forward. Or you could punch and find out what are the top 10 stocks in the group. Maybe they're straight. Well, there will be. If not, it wouldn't be doing this. There we go. But remember, the M in mission, you want the market to be okay. You want the wind at your back. Software technology, same thing, right? IHI, medicine doesn't look too bad. Okay, it's trending up nicely. Not a really clean entry at this point in time, but it has been trending up. A little bit of selling on Friday. Be a little cautious with that. Moving on. Mid-cap, here we go. S&P mid-cap. It's doing okay, but kind of lagging here. Kind of choppy. Not a real leadership position, is it? Watch out for mid-cap. Isn't that good to know? Here we go. Aerospace and defense hangs all right on the weekly and the daily. And you can see a cup with a high handle. Good volume on this bar, and then it pulls back on less volume. A little choppy. Look at it. Runs up here, and then it's, runs up gaps, runs gaps down. Met with some selling. It needs to show some power above these tops on the weekly and or the daily before we'd want to get interested in that stock or ETF. And the sector. Home construction, stay away. I mean, folks, do a compare and contrast. Well, that doesn't look too bad on the weekly. It's kind of near the highs. Yeah, that doesn't look so good. What does that say? Stay away from home construction. Done. You don't have to maybe this is the bottom. I don't want to play the maybe game. I want to look for stuff that's strong already and catch it and run it. It's not there. Leave it alone. Remember this. We have a limited amount of money and we have a limited amount of time. 2 valuable assets. Use both wisely. That's why we started Mission Winners, is to help people speed up that curve. Let's move on. S&P 500 growth doesn't look too bad on the weekly. Some tail bars on the daily. Kind of a poster child for what's going on in the market. The overall trend is okay, but there's met with selling at this point in time. It was met with selling here. It was met with selling here and here. Be a little cautious there. Move on. IWM still kind of lagging. Small caps, be a little cautious with small caps. Real estate, yeah, there's not a lot of power on the weekly or the daily. I'd be a little cautious with real estate. Moving on. Transportation, not a lot of power on the weekly or the daily, a little sloppier. Just be a little cautious. Airlines doesn't look too bad. It's trending nicely, right? And it's kind of grinding on up on the daily. Is there a clean entry at this time? No, but overall the group is showing strength. It's something to follow the coming week. That's why we do this, is just to help people speed up that curve so you're not flying out of control. That's kind of a bad pun when I'm talking about jets, the ETF, airline ETF. Okay, I rehearsed that. No, I didn't. It was just off the top of my head. Anyway, you got to have fun too. Banks don't look too bad on the weekly or the daily. Something to check out, maybe follow. Insurance, look, a nice base on the daily and the weekly. Look at that. Going across these tops right here. I'll draw you the line on the weekly. There you go, kiddos. Rock and roll hoochie coo. And if anybody knows the name of that song or who did it, I'll be really impressed. Okay, basing nicely here on the daily also. But it needs a lot of overhead supply. It needs to show some power above that top. It's kind of a slower, ponderous group also. Just be aware of that, okay? Regional banks, it's all right. Not a really clean entry, but it's acting okay. It's not cracking down here hard. That's a good sign. Mid-cap, a little sloppy on both the weekly and the daily. As you can see, be a little cautious. Moving on. Try to do these videos fast enough so it's not too long. Oil services. Look at the weekly. Tells you everything you know. Stay away from oil services. Done. And again, I'm not trying to be cute and funny. I'm just, look, there's nothing there. You're not going to find that in a chart book saying, this is what you buy. No. Leave it alone. Pharmaceuticals doesn't look too bad on the weekly or the daily. Needs to form a little handle here. I do like some accumulation that's coming into it in the drug sector. NASDAQ 100, a little choppy here on the daily. Doesn't look too bad on the weekly. Go across these tops. I like that. NASDAQ 100, hey, I love those stocks. And I love the max list. There you go. I love the max list. We make a video on it every week. QLD, same thing, same situation. Okay, move on. QLD. Retail started to lift up here. Doesn't look bad on the weekly. Got a little sloppy here on the daily. A lot of stocks did. A lot of stocks. Just says be a little cautious. Don't remember this. Good investing is not one size fits all. We adjust our share size and exposure in relation to what the market's doing. It keeps us on the right side of the action. And I love that. Continue onward. Cloud computing doesn't look too bad. Look at that base on the weekly. There's some accumulation occurring there. Same thing's true. And yeah, we're involved in some cloud computing. It's hanging in okay on the daily, a little sloppier up here. But you can see these tops. Takes that out on SKYY. Something to watch going forward. I think it's kind of cute. This is the cloud computing ETF with a ticker symbol SKYY. I think that's kind of clever. I like that. Silver, that's okay. No real clean entry there. Kind of choppy, back and forth, little gappy, but it doesn't look too bad. Steel, lagging, leave it alone. I'm not saying to be that. By the way, I didn't speed through that to be funny. Look at it. There's nothing there. Oh, maybe it's going to hurt. Don't play the maybe game. Look for what's strong now and look for entry. That will help you a lot. SMH, big gap down here, loose here. Look at those tail bars. There's the weekly gap down. Be cautious. Done. Move on. Same thing's true with SOXL, SSO. You can see the weekly cup and a handle. A little sloppy here on the daily. Got to watch that, like we discussed with spiders. Continue onward. Solar, lagging, leave it alone. Small caps, really lagging, leave it alone. Oil, U.S. oil, lagging, be cautious with that. Not a lot of power there, okay? Aerospace and defense, kind of choppy. Be a little cautious with that. Again, team, for everybody, I'm not being bearish. I'm just pointing out what is. Here's the analogy. You look outside and it's raining. Oh, it's raining outside. Oh, Pat, don't be so negative. No, I'm just saying it's raining. That's okay. Oh, look, it's sunny. Oh, you're always positive and up. No, it's just sunny. Just get in line with what is. Remember this also, folks. By the way, one of my backgrounds is in psychology, okay? Don't let the markets get you all rattled. And remember, Wall Street can be an extremely expensive therapist to resolve your issues. That maybe you think I'm getting a little deeper here. It's the truth. Don't argue with the markets. Stress derails thought processes in so many different facets of life. We do things at Mission Winners, and I hope you do too. And that's why we do these videos, to help us make better investing decisions, what to look for, and lessen stress. And that's a good thing. So biotechnology kind of lagging, home builders lagging, leave it alone. Materials, it's a nice base right across here. Needs to take that out. And there was some distribution in here too, so you got to watch that. And there was some selling on the weekly also. So a lot of overhead supply too, folks. You see that right in here? Be a little cautious with that. We're about done. Communications doesn't look too bad. A little choppier. It's kind of poster child of the market. It goes up, goes down, goes up, goes down. The trend is up. And that's good. Moving on. XLE, energy lagging, leave it alone. Financials doesn't look too bad. There's another financial ETF. That's good to see. We like it when the financials are acting okay. Moving on. Industrials, not too much leadership there. Just leave it alone at this time. Technology, kind of choppy here, folks. I mean, doesn't look too bad on the weekly up at these tops, but look at this. Oh, it gaps up. Oh, it gaps down hard. Whipping back and forth. Don't get caught in that, okay? Please. Let the stocks, price and volume action guide you. We don't impose our Mission Winners. We don't impose our will on. I've been doing this a long time. I was running a ton of money through the crash, into the crash of 87, and we were out because the market was sloppy into it. So there's nothing going on here with consumer staples. Leave it alone. Utilities, not much power there. Leave it alone. Healthcare doesn't look too bad, okay? A lot of overhead over here, so just be a little cautious. That's all. Consumer discretionary, kind of choppy. Leave it alone. Metals and mining, lagging, leave it alone. I mean, look at the selling volume on that last bar there. They sold it. So just be a little cautious. Now, on all these, it can change during the week, so you just got to watch it. XOP, oil and gas, lagging. I mean, look at the weekly. It just says, leave me alone. Nothing to do there. Retailing. Whoa. Be careful with retail. Done. Software. Doesn't look too bad, okay? You look at the weekly. Doesn't look too bad. Daily a little choppier, but the weekly looks a little better. Look into the software area. There you go. Technology.
That was Pat with the ETF breakdown, and as always, some major takeaways there. We've got clear strength in certain areas, but we're also seeing signs of distribution in others. The big question now is whether this recent pullback is just a pause in a continuing uptrend or the beginning of something deeper. That's what we're going to unpack right now. This week, we saw a sharp pullback in the market right as we hit key technical resistance. The S&P 500 has been forming a cup with handle pattern, but every time we attempt to push higher, we're seeing volume-based selling step in. The NASDAQ 100 has been holding up better, showing relative strength, but it too hit resistance and backed off. Now we're left at a critical juncture. Do we form a higher low and move higher, or is this the first sign of a broader market top? The answer lies in two key factors: price action and volume. If the market can hold key levels and reclaim prior highs with conviction, that's a sign that buyers are stepping in and demand is still in control. But if we see continued selling and lower highs forming, that's a red flag that we may be in for more downside. This is why we always focus on what the market is telling us rather than what we hope will happen. Sector strength gives us another critical piece of the puzzle. Gold and gold miners have been on the move, but they're extended and don't have a clean entry at the moment. Technology ETFs like SKYY and IGV are showing accumulation, which tells us there's continued demand for cloud computing and software names. Meanwhile, airlines are quietly leading, showing that institutional money is rotating in. On the flip side, energy remains weak, with XLE well below its 50-day moving average and heavy selling volume confirming that there's no reason to be involved there. Home builders are also struggling as rising rates start to apply pressure and small caps continue to underperform, signaling a lack of risk appetite in that space. So, how do we position ourselves from here? If the market forms a higher low, we want to be looking at strong ETFs and individual names that are holding up well. But if we start to break down further, we shift focus to shorting weak sectors and using inverse ETFs as a hedge. CPI and PPI reports this week are going to be key catalysts, and how the market reacts to that data will tell us a lot about the next major move. Now, let's turn our attention to the MAXLIST stocks, where the real money is made. These are the institutional darlings, the stocks that lead in both bull and bear markets. Pat's going to walk us through the setups, the ones showing strength and the ones we should be avoiding for now. Let's get right into it.
So here's Apple. It rallied up, and it's going, gosh, not too bad on the weekly, but then you look at the daily, gaps up and drops like a dang rock and closes near the lows on a big pickup in volume. That's distribution, folks, and it closed below the 50-day. That says, just stay away from me. And we have for a while. Really nothing to do with it. So we leave it alone. Move on. We've been in Amazon for a while. Okay, here, that was a good trend. Another base here, bought more, starts to roll over. See when they start to do this? Oh, it goes up, and then it starts to fall. Okay, what do we do in situations like that? Then it does it again here. Closes near the highs, and the next day they take it down on a pickup in volume. You sell into strength, and that's what we did. Decisions based off daily charts. The daily charts. I'm going to scalp here. I'm not going to 5-minute charts, but it's dropped here, and so we sold the last shares and locked it in, and we're out of it. And we have a policy. This is a very important policy foundation that I've used for a long time, and I'll share it with you. And it's simple, but it works. Folks, never let a good profit turn into a loss. Never. I taught that at IBD meetups forever, and it works. Let's move on here. What do you say? Rock and roll. By the way, there's a good football game going on tomorrow, I think. Should be a good football game. Anyway, and people say, who are you rooting for? I'm rooting for the Chiefs. I'll tell you, that's for everybody. Don't get mad at me. If you're rooting for Philadelphia, great. The key point is this. I don't want anybody getting hurt on either team. That's the big thing for me, okay? My kids played sports, and I don't want them getting hurt. Didn't want these folks getting hurt. AMZU, leveraged one, dropping here. Choppy just like Amazon, be cautious. Alibaba started to lift up. You can see it kind of had a cup formation through here. I'll show you something here. Look, right there. I'll draw the line to help you. It had a cup and a handle formation, and it gapped up and lifted up and ran up, and then it started to fade off. What do you do in a situation? If you bought this and it's running up and it starts to fade, or just running up and stalling, you sell some into strength, okay? No day trading, but let price guide you. I mean, look, it runs up and it starts to back off the highs. You sell some, and again, don't argue with it, all right? And finally, it keeps going. And then the other philosophy we have at Mission Winners, I'm not going to let a good profit turn into a loss. So what do? We took our last shares off, and that's where it's at now. So now we sit tight and wait, okay? And there we go. Maybe it'll change in base, and if it does, we'll be able to buy it with no baggage, no psychological baggage, no financial baggage. Let's rock and roll on. What do you say? BIDU, a lot of chop in here. Look at this. Oh, it's going up, and they take it down. It's going up, and they gap it down. Tail bar here, too. High emotions in that chart, folks. Stay away from it. High emotions and good investing are mutually exclusive. Be cautious with that. Let's move on. Goldman Sachs lifted up. We own this from lower, and it's been a good run. We've sold some into strength, especially right in here. See where it rallied up, gaps up, runs up, and starts to reverse down on a pickup in volume? You take a little bit more off. You sell off 10 or 20% of your shares and lock in more profits. Decisions based on daily charts, not day trading, not scalping, not in and out, okay? My goal is this. I like to buy them and let them work as long as they can. How long is that? Till they stop. And we don't need to know when that is. Price and volume tell us. That's what we do. Meta, symbol based breakout right here. You can see it on the weekly also. And there was another one right here. Just basing nicely. I talked about this at least 6 times before it broke out. Bases and runs. And we're in it. We've sold some into strength. We're in good shape. We just let it work. But that's a good move. From here, I'll call it, 630. 630 up to, got to hit 720. 90 points, folks. And it's just trending. Look at the trend up the ADMA. And you say, well, that doesn't do me any good. I don't own it. Here's why I do these videos, so that we learn more now than we did before, and you'll own the next one. The successful people turn a negative into a positive, and it works. So, and I just wanted to share that with you. It's exciting. Make that a little bigger for you. Let's move on to the next one. We're about done. Microsoft, what do you see there? I see nothing. There's nothing. It was good at one time. We owned it back in here. And that was a kick butt run. But now there's nothing there. Just, it's below the 50-day. Here's an investing maxim for all of you. It's simple, but it works. The air is better above a rising 50-day moving average line. Okay? The odds are in your favor above the rising 50-day moving average line. Something to stick with. Okay? Good to remember. Continue onward. Netflix, it's owned. Down in here, based out here, ran up, started to fade off, and we sold some into strength and just managed it. Looks good on the weekly, but again, this is why I love this template, weekly and daily. Runs up, gaps up, runs up, starts to fade off the highs. Do you see where it opened? And it runs up, starts to fade. So what do? We sell some into strength. The chart was telling us to, and that's it. Continue onwards. NVIDIA, ain't nothing there, folks. Below the fallen 50-day. Just leave it alone for now. Oh, maybe it's going to turn? Yeah, and guess what? When it does, we'll be ready. There's just nothing there. As they say, don't make a silk purse out of a sow's ear. If it ain't there, it ain't there. Same thing's true with NVDL. Tesla, it's below the fallen 50-day. There's nothing to do with it. By the way, you see this weekly base breakout right here? I just want to show you this. I talk about long base breakouts that are easy to see. Be very pragmatic here, folks. Seriously, look for simple. You go, oh, that's corny. No, it's not. If it's easy for me to see, it was easy for you to see and other people to see, which again increases the odds they're going to buy too, right? And they did, and we did, and we did. And that's, 280 up. Now you're not going to sell it at the top, okay? But 280 up to 470 something, that's dang near 200 points. That's good money. And you just ride the darn trend, okay? And here's a good lesson for you. I'm going to take this little post off here. It's running, okay? Oh, it gaps down, and then it runs up, and then it reverses down again on a pickup in volume. That is a very reliable trigger. I'll make this bigger, to sell some. There we go. So Tesla, and we've been out of it for a while, and that's where it's at. And then TSLL, similar situation. This is one, if you don't follow, I encourage you to. It moves just like Tesla. I mean, look at this chart here. And then look at this. It's the same, even here. This is how close they are in correlation. This low is just a little bit above this low on TSLL, right? This low on January 13th. Here's TSLA. This low is just a little bit above this low. It's that simple, and you let her work. There we go, and there we go, and then we rock and roll on, and there's Visa. It's everywhere you want to be. Note the simple base right there. MAXLIST stock. And there's a good run right there. There's a good trend. Now, let me temper this. Don't buy it up here. Don't chase price. That's an emotional thought process. And again, high emotions and good decision-making in all facets of life are mutually exclusive. So we just let it work. And I think that's the last one. Oh, XYZ, right? Block. This, just to clarify for education for everybody, this is the old square. Okay, SQ, which was a MAXLIST stock. Block is a MAXLIST stock. Or XYZ block. That's the actual name. That's the ticker symbol. And you can see it's just kind of chopping around here. What's it need to do? Well, let's take a look. We always have a plan, game plan. There's some tops across here. It's not perfect. Right in there. What's it need to do? It needs to take this out, and it needs to do it on really good volume. Why? Well, it's kind of choppy. There's a lot of overhead on the weekly. Also note, it ran up, but it fell on heavier selling volume than it went up on. These are the things we teach at Mission Winners.